Good morning, I'm Peter Milios from the Finance News Network. US stocks dropped on Tuesday after hotter than expected inflation data for January spiked Treasury yields and raised doubts that the Federal Reserve would be able to cut rates several times this year, a key part of the bull case for the equity market. Overall, the Dow Jones Industrial Average lost 524.63 points, or 1.35%, in its worst session since March 2023 on a percentage basis. At its lows, the 30 stock index sunk 757.52 points, or 1.95%. The S&P 500 slid 1.37%, while the Nasdaq Composite fell 1.86%. The Russell 2000 also suffered, tumbling nearly 4% for its worst session since June 2022. The Consumer Price Index rose 0.3% in January from December. CPI was up 3.1% on an annual basis. Economists polled by Dow Jones expected CPI to have increased by 0.2% month over month in January and 2.9% from a year earlier. Core prices, which exclude volatile food and energy components, rose 0.4% month over month and 3.9% from a year ago. Core CPI was expected to have increased 0.3% in January and 3.7% from a year earlier, respectively. The 2-year Treasury yield jumped above 4.63% and the 10-year topped 4.29% following the CPI data. In corporate news, JetBlue Airways spiked almost 22% after activist investor Carly Kane reported a nearly 10% stake in the airline. Toy maker Hasbro lost 1.4% after missing analyst expectations for the fourth quarter. Shares of Avis Budget Group slipped about 23% on the back of disappointing fourth quarter revenue. The VIX Volatility Index surged to its highest level in 3 months, reaching 16.5 in late afternoon trading on Tuesday, surpassing its 200-day moving average of 15.08 and significantly exceeding the session low of 13.43. According to SIBO, the VIX represents a 30-day expected volatility measure of the US stock market, calculated from the S&P 500 index options prices, and has consistently traded above its 50-day moving average of 13.18. Turning to commodities, recent supply cuts by Kazatomprom have prompted support for new uranium projects, with developers anticipating improved price outlooks and increased interest in the supply agreements. CEOs of companies like Bannerman Energy and Deep Yellow Limited foresee sustained high prices for uranium over the next decade, driven by increased demand as countries like China, Japan, South Korea and France expand their nuclear power capabilities. Turning to US sectors now, all closed lower overnight. Health recorded the fewest losses, whilst consumer discretionary was the worst performer. Looking ahead to the Australian landscape, the SPI futures are pointing to a 1.2% fall. Thank you for listening.